It's time to hit social media. For that, we're going to bring in Landon Swan, the co-founder of LikeFolio.com, and Fast Market contributor Jenny Horn is back in studio with us. Landon, welcome to the show. Booking.com, this is an interesting one from a trading standpoint, but I want to hear what the social data shows.
Absolutely, yeah. And Alex, I saw the last segment. I'm with you. It's still kind of Priceline in my head, but we'll go with Booking. They got the ticker change. When you look at the purchase intent, you'll see very quickly that it is seasonal in nature. Obviously, people aren't booking a lot of travel in the winter times, and it starts to pick up in spring and peaks in sort of late summer. And what you'll notice is that for several years, Booking had a nice uptrend, higher highs, higher lows on purchase intent, and the stock did the same thing. And then last year, that last summer was a bit of a disappointment, and the stock stopped growing, kind of sold off a little bit. And now what we're seeing with the stock selling off even more right now is that purchase intent, the early spring sessions is starting to run up very nicely, and it's actually getting to the point where it's almost as high as last summer. And so we think that they've had a history of sort of doom and gloom guidance on earnings reports, and what we're seeing is that they're starting off the year very strong. Spring is getting to those summer numbers, and so it's looking pretty good here. We think that with the price coming down, expectations could be lower, so there's potential for a surprise to the upside.
Landon, I see some divergence on your chart here versus your buying index and the price of the stock. So this is one of those times we like this when this happens, doesn't it? Because it shows that there may be some opportunity there.
This is what we love to see. I mean, a lot of times we'll get an oversold or an overbought, but this is one of those situations where purchase intent's going one way and it's sort of trending in one way, whereas the stock is going in another. So with the stock off, I think about 18 or 20% from its highs earlier in April last year, now it's down about 18 or 20%, and the purchase intent is showing some potential signs of life. I mean, it's early in the season, so we don't know how summer's going to play out yet. But early indications are this is a good start for them for this year. And so this is sort of a mix between an earnings call and maybe a 2 or 3 earnings cycle call, because it's a very good start. We want to see follow through on the summer, but it's definitely off to a good start right now.
Yeah, and if you look at it too, Landon, I mean, SPX up 13.5% in spite of this move we've seen down. Priceline or Booking.com flat on the year and actually down 20% year over year. But I want to pull Jenny into the conversation here. Jenny, you're just getting back from a vacation. Did you look at something like a Booking.com when you were looking to book it, or do you just go straight to the source and go to the hotel in particular?
I usually kind of do a mix of both, and I think that I'm not alone. You kind of see what's the best price out there. But what's actually interesting about Booking.com, it's something that I think a lot of people forget. In addition to Priceline, Kayak, RentalCars.com, they have open tables. So they're more than just when you go to a vacation, they're also restaurants. And they just actually purchased Venga, which is a platform for more restaurants. So it seems like they're trying to get into basically the consumer space as a whole, which is really cool when you think about open table has become huge.
Yeah, and Landon, I want to ask your take on that particular space, because it seems like all these big companies that were kind of first to market in whatever the space is are all racing to develop these ecosystems. Are you seeing that with the Booking.com, and does that reflect at all into maybe consumer happiness or into the purchase intent that you're seeing?
Absolutely, yeah. Booking.com is interesting because depending on what you want to do, they'll redirect you to one of their different properties. If you want to go on an airline, you're going to see Kayak. If you're looking at hotels, it's Priceline. You can also start to get in the house rental game a little bit on Booking.com. And one thing that we've seen over the years is their happiness, which you've got the chart up here. That line is the overall happiness of the consumer. And you can see it went from 70% several years ago. Now it's down under 50%, which is obviously a very bad trend. But the good news is the downslide, the downtrend has actually stopped and is sort of leveling off. I think a lot of the unhappiness that people have is not necessarily related to Booking. It may be because airlines make it very tough on price aggregators, on travel aggregators, because you get in there and you think you're booking a flight for a certain price, but then when you actually want to pick your seat or take bags with you, God forbid, you have to pay extra. And so I think people have that a little bit of unhappiness from that bait and switch, which isn't necessarily Booking's fault. But to their credit, one of their properties, Kayak, has a new feature on there called the Fee Assistant, where you can tell it how many bags you're planning on taking, and they can actually change the prices for you. So they're getting ahead of that. They've seen that consumers were frustrated with that, and they're giving consumers the tools to combat that and actually figure out what they're going to pay. So it's good to see the happiness has stopped bleeding and is starting to level off a little bit now. So this is another good long-term trend for Booking.
Yeah, it's good to see that they're making the necessary changes based off the feedback they're getting. But you mentioned airlines making things a little bit difficult for these type of companies. You know what makes things difficult for traders, Jenny, is the stock being $1,723. And so this is one that it's really difficult to trade in terms of stock outright or undefined risk. This is really more of a spread market in terms of the options. Are you seeing anything on Twitter that reflects kind of that sentiment?
Yes, so I mean, people do feel a certain way about the stock being so expensive, and that's definitely something you see on Twitter today. So our first tweet says, Booking holdings almost unplayable, but it will see 1765-ish and then up 1875 plus. Earnings are tomorrow. So this is a bit of a bold move. We see plus or minus 6% implied move going into earnings today. Valuation is also trading near historical lows. So what could this mean for earnings post-market today?
Yeah, think about when you say, oh, 5 or 6%. That's about where everything comes in, right? Yeah, except it's $82
right.
is 5 or 6%. So that's a move that you have to understand. You know, that's one of the things we talked about with Ben Watson was how do you get people to look at the percentages and not the fact that it's an $80 expected move.
Yeah, but the funny thing is that Amazon almost gets a pass on this, and Amazon's consistently one of the most traded names, and I think it's actually because it's expensive. And I know Booking, when it was Priceline, was always pretty consistent. But when you're looking at something like that, Landon, that doesn't really tie into what your data is showing. You're mainly looking at, hey, we see a divergence between purchase intent and stock price, and that makes us comfortable making a call, right?
Absolutely, yeah. Purchase intent off to a good start. Great spring so far, posting last year's summer numbers already. But with, I hate to say only, but only a 5% expected move. There could be some value in calls on this one. But again, we want to see what the summer plays out, so this may be a little bit more longer-term position rather than just an earnings call.
And then, Jenny, on your second tweet, it looks like it's getting a little bit more technical. We talked to Ben Watson a little bit, and he was pointing out how much it can move. To Landon's point, it moved almost $200 on its last earnings announcement. What are you seeing on Twitter in terms of technicals around this one?
Yes, so our next tweet is from Brant, who says, Booking holdings with earnings today, forming a 6-month symmetrical triangle that could possibly be a right shoulder for a massive H&S top. Weekly trend is down and daily is close to following. So this is definitely more technical analysis, which Ben Watson has definitely more expertise than I do. But when looking at these other OTCs, their competitors like TripAdvisor, like Expedia, you're seeing them getting crushed this week. I mean, Expedia got downgraded by Susquehanna Monday. TripAdvisor got downgraded today. Their price target was lowered at Stifel. So all these companies are really lower during this week. What could this mean for a competitor like Booking.com?
Well, real quick, I want to kind of get Landon's take on this because, Landon, when you're looking at companies like this, you're talking about the brand being kind of the product too, and that usually helps your data be more accurate. To me, this seems like one that people would tweet about when they're going to use it, and that would help the accuracy. Is this one that you're like a little bit more comfortable issuing takes on, or do you follow this one a little bit more closely?
Yes, because Booking is the main brand, but they do have several brands, like Jenny pointed out. And so between Kayak and Priceline and OpenTable and the others, there is a little bit of dilution between the tweets as far as the consolidating them on the company level. I will say, though, to Jenny's point, we've got a bearish sort of outlook on Expedia right now and a bullish outlook on Booking. So we don't feel like this is an industry-wide phenomenon. We are split on these two, and so we agree with the downgrade on Expedia, and we are bullish on Booking right now.
All right, good stuff. We got to leave it there, Landon. We'll look forward to talking to you again next week.